All right, tankers, PSTH Investor Day update. I said I would give one, and here it is. So just before I get started, I'm going to share my screen with you. But if you wouldn't mind giving the channel a like, a comment, and subscribe, that will really help out myself and Joel, my partner who runs the podcast with me. And we would appreciate it. So anyway, just getting into the Investor Day, I think I'll kick off with what I found to be the most important points of the call. So UMG has already got a pre-approval from the New York Stock Exchange, could be dual listed within weeks of the Euronext listing. Dividends, highly likely, but it's a board decision. UMG could be up to 130 or 180 billion in market cap based on streaming revenue growth projections by 2030. And it was bought for, so the total valuation was 41 billion. The SPARC probably won't get worked on until RemainCo is done. There's potential future UMG stock buybacks. However, again, it's a board decision. Jackie Reece's shout out had the connection and introduced PSTH to UMG, so that's awesome. RemainCo, PSTH is willing to purchase a majority stake in a company greater than 50%. Other major points, SPARC 2. So once SPARC 1 is completed, if you're a holder, you'll get rights to SPARC 2 and on and on and on. So that's my favorite part of the news. Non-fungible tokens and UMG means that there'll be new avenues to monetization. And I think I've got a little bit more on the slide deck a bit later on. And Bill Ackman, quote from the Investor Day presentation, RemainCo signed a confidentiality agreement yesterday. RemainCo can immediately pursue a new business combination and can close a cash transaction as early as Labor Day and a stock merger by October. He's basically telling you that they've got the target ready to go. They've signed an NDA and just sit tight. All right, so everyone knows how UMG makes money. They make it through three buckets as described on the call. Paid subscriptions, which I won't go into, pretty self-explanatory, ad-supported streaming, and then high growth opportunities. So I should say this is how they make money through streaming. They've also got physical sales and other things, but the bulk of their revenue is through streaming, as it is for most players in the industry. So the exciting growth area that I want to talk about was the ones they highlighted, which was social media, digital fitness, and gaming. And you can see here at the bottom of the slide a few of the partners they've got. Just to name a few: Facebook, Instagram, TikTok, Snapchat, Peloton, Oculus, Lego, Epic Games, Riot Games. So massive partnerships there. And I think there was news that dropped today about a big contract or a big partnership between UMG and Snapchat. I need to go and double check that. So they're basically saying that with these growth opportunities, the streaming is going to generate a majority of total revenues into the future, and it's growing at 20% annually, which is huge. Music today is not monetized as efficiently as it was 20 years ago. And they were saying that even though the format is now more efficient, the per capita spend, like I think last year or the year before, was US $37 per person. But the inflation adjusted spend in 1999 was $81. So even there, if they can just create some efficiencies, there's some room to monetize this a bit better. Interestingly, music is the cheapest form of high value entertainment. They were comparing it to video games and cable television. It costs 10 cents per listening hour for someone to listen to music. But video games are 50 cents and cable is 80 cents. So opportunity to grow. Interestingly as well, they were saying that the technology leaders are driving streaming adoption. So you've got Spotify, your Apple, your Tencent, your Amazon, your Google, and others who are using music as a tool to cultivate customers, to sell them things outside of music. And that will continue to drive the growth of the market to UMG's benefit over time. So just think about examples of this, like Roblox, which is the game. They might have some sort of music partnership. So you can sort of get the synergy there, or the Snapchat deal I mentioned before. All these platforms are looking at ways to incorporate it. They were basically saying that since the advent of streaming, it's become more profitable for all parties in the industry. So UMG, the record labels, the artists, streaming has just really breathed life into this industry since about 2013 or 14. I think Spotify maybe its inception was 2011, but it's just really turned it around. I didn't include the slide here, but they were saying that there's going to be something like 13% compound annual growth rate in years going forward. What I might do is I'll drop a link to the recording of the presentation in the description, so you guys can go and watch it in full if you like. Reece Longwell uploaded to YouTube, so shout out to him. NFTs, I was sort of touching on it before, but they're saying it's a new way to monetize music through collectibles. So think about songs, album art, merchandise. Imagine having your own unique piece of merchandise. I can get behind that. ticket stubs as an NFT. So yeah, they reckon music is the ideal art form for NFTs. And I got to say, I agree. I've been a little bit skeptical on NFTs, but lately I've been doing some more research into it and viewing some of the tokens you can buy. And I think I'm coming around to, this is a huge, interesting area, and I kind of love it. They were saying that between 2019 and 2030, the CAGR subscriber average revenue per user for high growth opportunities is going to be at the lowest 13% average revenue per user, at the high 29%. So a lot of room to grow there. UMG valuation, like I sort of covered this in the other one, and it's probably better if you go and listen to the call, but maybe I'll just hit the highlights here. They're basically saying the nearest comparable is Warner Music Group, but the UMG, I guess, statistics are way better than Warner Music Group. So you can see here that they've got 2 times the revenue, they've got 2 times the recorded music market share, 2 times the publishing market share, 2.5 times geographic markets covered, more employees, and out of the top 10 artists represented globally, UMG has all 10, Warner Music Group has none. You can see here that the organic revenue growth is higher than Warner Music Group, and even in COVID-affected 2020, they still grew revenues by 5%, which is impressive. They have a higher operating profit in all those years. And they were saying that, this is interesting, and I wonder how much of this was Bill Ackman being a legendary salesman, but they were saying that the operating margins are similar. And I've got some dot points here. Bill Ackman was saying that it's because Warner optimizes margins for margins and cash flow, whereas UMG is maximizing the value of the business over the long term by investing in artists and investments in the industry. So I tend to agree with him. I see this as a good long-term opportunity, and I feel like once they've get the payoff from all these investments, we're going to see it reflected in the bottom line. They did do a comparison to Spotify and Netflix, Spotify being a distributor, so it's a bit of an interesting comparison, and Netflix being, I guess, sort of similar to UMG, but in the video TV space and movie space. So I guess the main takeaway from this, which I really liked, was the fact that UMG and Spotify as well are evergreen businesses. And I should say that UMG owns a stake in Spotify, so they got skin in the game there. But yeah, evergreen in the sense that with music, you're going to be listening to the songs you like hundreds, if not thousands of times over your lifetime. Netflix, you might watch a movie you love a handful of times, probably only once, and TV shows the same. They did talk a little bit about the UMG valuation, and there was, I think on the next slide, they talk about JP Morgan valuation, who valued it at 50 billion euros off the cuff. And they were saying that if that's correct, and if you believe it deserves a higher multiple, then the $13.91 paid by PSTH is basically netting you NAV of PSTH straight away, meaning that if it is a $50 billion euro valuation, then it's already worth $20 just for this part, and then you're getting RemainCo and the Spark for free. So hugely bullish news there. And this is just a slide sort of showing what the valuations from different analysts at these different banks have presented and showing the price paid. So yeah, overall, it was a really good presentation on the day. The one beforehand by UMG was really good too. I've heard a few people say during the week that UMG, I've heard a few bear arguments of saying that UMG doesn't do much. They just, benefit from the back catalog that they own. But in my mind, that's the bull case as well. It's like, that's right. They own the IP to all of these songs, all these back catalogs. It used to be about hit making. Nowadays, streaming has made it about the lifetime revenue generated by an artist. And UMG owns the best IP in the industry. That's just as simple as that. So hugely excited, hugely bullish on this. I must disclose I own shares and I'm just trying to buy more because unbelievably the price did not go up after this news. So I'm just trying to accumulate as much as I can. I hope you like this kind of content. Please hit like, subscribe or comment, and I'll see you in the next video. Thanks very much.